Corporate Finance Excel practice problem. In this presentation, we're going to work a practice problem in Excel related to nonlinear break-even analysis. Get ready. It's time to take your chance with corporate finance. Here we are in Excel. We have our information on the left-hand side. We're going to put that into the blue area into our worksheet on the right-hand side. So we're basically going to be saying that our variable cost, our break-even type of analysis format is going to work up to a certain point, and then we're not going to have a linear progression up until after that point in time. So let's think of what this might look like then if this were the case, because obviously within our assumptions we make here, within our break-even type of analysis, is that we have this nice linear kind of relationship. That's the point of us breaking out the variable costs and the fixed costs in analyzing these things by behavior. So let's look at this. We got the information on the revenue and costs is only relevant up to sales volume of 107,000. After this point, the market gets saturated and the price per unit falls from $18 to $14. So we're going to say after the 107,000, then we can't, if we go above that point, we can't really charge the 18,000. If we plan on the sales going over 107,000, we're going to have to plan on $14 per unit sales. So we don't have that consistency past that point in time. How would we break that out into our analysis? There are also overruns at this production volume, and the variable cost per unit goes from $9 to $10. So we're going to say now the variable costs are going to be increasing once we go past the 107,000. Obviously, these are going to be some kind of estimates and projections because we're projecting out into the future. And you can see how if you set your information up where you have the data on the left-hand side or up above, and then you do your calculations on the right, you could start to project and think about different types of scenarios much more easily. But one of the ways we do that is with this linear kind of analysis. If we start to think, hey, what if I don't have that type of analysis? What if there's going to be a change to the price? Meaning, for example, what if I go over this 107,000 and then start to think, well, that means the price is going to be lower, but maybe I can sell, more. Where should my production level be? What should we be aiming at in terms of our sales? So then we have the fixed costs are going to be the 60,000. Let's do a calculation for units at 107,000 and 207. So if we have this calculation, if we thought this, we're going to say, okay, if I go over the 107, then maybe that's not good because I think I'll have to reduce the sales price because the market will be saturated. I won't be able to charge the same amount for it because there'll be too many items in the market. So should I go over the 107? What if I can get to 207, 100,000 more, but I sell them at $14 as opposed to the $107? Well, you'd have to break out basically two different kind of scenario calculations here, or you could use one in order to change back and forth between the two scenarios. So let's take a look at what that would look like. We're going to do our operating income calculation using, in essence, a contribution margin type of calculation rather than normal income statement. Then, rather than sales minus cost of goods sold, we're going to have the sales minus the variable cost to give us the contribution margin, and then we'll subtract out the fixed cost and give us the operating income. So we'll start off with the sales. Sales is going to be the units sold, and we're going to multiply that times the unit sales price. That's going to give us our sales. So the units that we're going to sell, we're going to start off and say, well, what if we cap out and sell at this 107, and we think that we could sell those at the increased price because we're not going to flood the market, so we could sell them at $18 because we have some more market power to price higher there. So I'm going to say the 107,000 times the 18 then is going to give us 1,926,000. Let's put an underline on the 18, home tab font group underline here. Let's do some formatting, highlighting these three cells or selecting them, home tab, the alignment, increase the indenting, selecting the sales item, home tab, alignment, increase in the indenting. Then we're going to go to the variable costs, colon. We're going to take the units sold times the unit variable cost. That's going to give us our total variable costs. So that's going to be then equal to the units we're going to sell. I'm just going to pick up the same number of this one. So we could pull it internal to the statement here. And then we're going to say the unit variable cost is going to be equal to the $9, the $9. And then I'll multiply this, the 107 times the 9. That's going to give us our variable costs of the 963,000. Let's put an underline, home tab, font group, and underline here. That's going to give us then the contribution margin, which is going to be equal to the total sales minus the total variable costs. Let's put an underline under the variable costs here, where we're going to go to home tab, font group, and underline. Let's then subtract out the fixed costs, which are going to be then this 60,000, and that's going to give us our operating income, which is going to be the contribution margin minus the fixed costs. Let's put an underline under the 60,000, home tab, font group, underline, double underline under the 903, home tab, font group, and double underline. Okay, so then we might think, okay, well, what if I go over the 107, then I'm saturating the market and I'll have to charge less for them, but maybe I'll sell a lot more. So would that be worthwhile? Now, I also think that I might have to end up paying more if I go above, that far above as well, another $1 for the cost. So let's see what the impact would be. Now, we could change. If you were to run this worksheet, you could then just simply change these numbers, that number right there, and you can change this number here. Or we might want to copy it over so we can do a side-by-side comparison, which is what we will do. So to do that, let's go ahead and select these 3 cells, and let's format this first. Home tab, alignment, increase the indenting here. Let's increase the indenting here. Home tab, alignment, increase the indenting here. Okay, so now I want to copy these over to this side, and I want to copy everything over, everything that's coming from the data, I'd like to keep the same. And then everything that's internal to the cell, I want to not do anything to it because I want the relative formula to pull over. Therefore, I'm going to make an absolute reference for anything that is being pulled from the data, leave anything that's not being pulled from the data, any formula internal to this worksheet alone. So I'm going to double click on the 107. That's coming from the data. So I'm going to make that absolute reference by selecting F4 on the keyboard or putting a $ before the B and the 19. Then this 18, that's coming from the data. Going to make it absolute reference, or F4, $ before the B and the 7. This formula is internal. Therefore, I want it to move relative to when I copy and paste, so I leave it the same. This one, internal, so I will leave it alone. And notice that this one came from the data, but now by picking this one from an internal cell, I don't have to do anything to it because now it's internal there. So I only have to change the one number up top to fix that one. And then this one is coming from the data, so I'm going to select F4, making it an absolute reference, $ before the B and the 13. This one is internal, nothing's going to happen to that one. This one is going to be internal, we don't do anything there. This one is going to be from the data, therefore I'm going to select F4, putting a $ before the B and the 16. This one is going to be internal, nothing done there. Now I'd like to pull this over. Now I could copy and paste the entire thing, but notice I have some cell references here on even the names. So what I like to do is just use a formula to pull over the names and then format paint the format of it. So I'm going to put my cursor in H2 and just say equals, and I'll pull over then the name, put my cursor back on that cell, put our cursor on the autofill handle, copy that on down. Then I'll format paint it, but before I do, let's copy all the numbers. Now I'm going to select all the numbers over here, right click or hit Control C on the keyboard and copy. Put my cursor over here, right click or hit Control V on the keyboard, paste it normal 1, 2, 3. Then I just want to make this formatting like this over here. So I'm going to select the formatting over here. We're going to go to the Home tab, Clipboard, Format Painter, and then just select. All I have to do is hit the top cell and it'll pick all the other ones up. Perfect. All right, so now we just want to make the changes we need to make, which means we're not going to be selling the 107, but rather 207. So now we're going to go way over that point where we think we're going to saturate the market. We're going to say, well, we think we could sell 207, a whole 100,000 more, but we'd have to sell them not at the $18. We'd have to lower the price of the whole thing down to $14. So we'd have to lower it down to $14. And we notice that changed this one automatically. And note, but we also think that the cost will go up from $9 to $10. So we have $9 to $10 on the cost per unit. So notice our contribution margin went down per unit from 18 minus 9, $9 to 14 minus 10 or $4, even though we sold 100,000 more units. So is that worth it for us to do? We might, start to put in some scenarios like this. We would then say, well, the contribution margin is here, fixed costs, and we're coming out to, even if we sold 100,000 more, we're coming out to less of an operating income there. So it doesn't look like a good idea. And then you could start to kind of fiddle with these numbers and say, well, what if I can charge $15 and I sold 100,000 more? What if the cost doesn't go up to $10 but stays at $9 or $9.50 or something like that? So you could start to fiddle with these numbers. You say, well, what if, this one stayed at $9, and notice I can change the number over here and it'll change over here automatically, right? So that's still a problem. What if, you could say, well, what if I sold not 207 but 300,000 at that price? Well, then now you're higher, right? And if I pull all the numbers over, I'm going to undo that from the data. Then we can start to make these side-by-side scenarios. Again, the initial assumptions are simply assumptions. You might start to think, well, that's completely arbitrary. How in the world would you know? You hit this cutoff at 107,000. How do you know where that cutoff is? You don't. You're looking at the market data from the past. You're projecting out into the future, and then you're making the best assumptions you can on the past data and what kind of projections you think are going to happen in the future. And if you set up your worksheet in such a way that you're pulling all your information from the data on the left, then you can really start to brainstorm this and put into focus different scenarios, even when you have like this non-linear type of situation.